again, this is not to do a super deep dive into SBA lending. One, I'm not the person for it. I have 3 years as a commercial lender, but that was many, many years ago, and I haven't done much since. But yeah, we would probably get on down the. We'll probably get a commercial loan officer or a contact to come on, and if this is something you guys really want to kind of spread your wings in, okay. So yeah, that's misleading. It's not comprehensive, but here we go. So just understand that SBA, they're not a lender themselves. Okay, they're not the lender. The lender is going to be the bank. Okay, but again, as it says here, the SBA guarantees a portion of that. I think it's about 85% of it, if I'm not mistaken, to reduce the risk of the bank who's ultimately going to be issuing the loan. Okay, so just know that little nuance there. Right. So okay, there it is. So it typically covers about 75 to 85%. Just know that from this slide here that not all lenders are, experts in SBA. There are some that do it very well, and there are those who are like, this is all they do, and they do it very, very well, right? They're experts in the SBA. When it comes to commercial lending, guys, just know, right? I'm sure you've come across in mortgage a client who goes, "Hey, I have 10 free and clear properties. Can't you just give me the loan?" Right? My FICO score is great. Right? A lot of that was based on back then what's called the 5 C's: credit, character, capacity, collateral, and I forget one other one. Maybe it was the 4 C's, I forget. Right? It's a kind of the story behind who the borrower is. And a lot of character. Thank you, C. Character. So a lot of lending was kind of based on the 5 C's, right? The whole picture and the profile of a borrower. Well, that's still true, really, of commercial lending. It's not really true of residential, right? As we know. Why? Because I don't care if you're the most holiest, perfect, sinless person there is, honest guy. If your DTI is at 51%, I can't do you the loan under conventional loans, right? Because now with residential lending, it's all metrics, right? You got to meet, right? And so your FICO scores, your down payments, your LTVs, right? Your DTIs. Commercial, there is that, but they still, the whole 5 C, the character and who you are, the story matters, and that's where you have a lot of differences in commercial lending from one bank to another. And that's also, it comes into place where there are people who do commercial lending better than others, okay? But you do have your PLP lenders, the preferred lenders, and at GivingTree, my point is at GivingTree, we do have 2 outlets for that PLP SBA lending. One of them is the whole organization as a whole. That's Velocity SBA. Okay, so if you look in our ERP and the vendors that we have as an option, Velocity SBA is a preferred lender when it comes to SBA. This is all they do. And then we do have other outlets that are more individual consultants that you can work with. Okay, should you have a client that's looking for an SBA loan. When it comes to SBA programs, just know that I would consider the 2 more popular ones. C just said it right now, and the one he used, it's the SBA 7A. Okay, so you will hear that very prominently in the marketplace, and the 504. Okay, what are the main differences between these 2? I'm not going to get into the weeds of it, but SBA 504 is a more harder program, I would say. It's more for bigger purchases, big, industrial building, purchases, or huge retail purchases, right? They work in conjunction with a commercial loan from the bank. Okay, so you're essentially, and maybe Freddie is is also a commercial lender, has a background in as a C. Correct me if I'm wrong here, but with the 504 guys, you're essentially getting 2 loans, correct? Am I not? Yes, right? Okay, so there is an SBA portion of it and a bank portion of it, okay? But again, that's for like heavier duty stuff, okay? I don't know if this is my opinion, but I'm gonna say it. I don't know if we're gonna touch much of 504s as a conduit through mortgage. Okay, 504s are more going to be directed to your commercial specialist. Okay, but you will probably come across 7As. 7As can be 7As. You can do retail buildings, like let's just say you have a client who's a barbershop owner on a standalone 1-unit commercial building and he wants to buy it. You can do something like that. You can do working capital like these. So it's a much more flexible program, and it's probably more widely used out in the market, okay, or more common in the street, okay. There are other smaller SBA guaranteed programs like the SBA Express. I think SBA Express lends up to either 300,000 or 500,000. It might be in another slide. And then there are these smaller programs like the micro loan and the export loan. So I've done a lot of expresses in the past when I was a commercial loan officer. That's something for more like an existing business owner, and they need extra funds, right? So a common one was a $35,000 express program they roll out here and there. It will take less than 30 days. And we'll go down, in the specifics with each of these down in the next slides. But as these programs can take 90 days, 120 days. I don't know what it's like these days, but I know back then when I was in it about 20 years ago, it wasn't unusual to see loans that took 6 months. Okay, guys. So commercial loans can take a lot longer. As such, SBA. So here's kind of a breakdown of the features of 7A. You can do up to $5 million. So the terms, guys. So when you're discussing terms with a client of yours regarding, hey, is it similar to residential? Yes and no. Okay, so in mortgage, probably 90% of loans have an amortization of what, guys? What's the most common amortization you're going to see?
30 years.
30 years, right? In commercial, it's 25. Okay, and where most of us are selling some type of fixed rate, whether it's on a permanent buy down, a temporary buy down, or just a fixed rate, or even an ARM product, right? Which is all fixed. On a commercial, while it's amortized over 25 years, the loan matures in a shorter period of time, either being, I don't know if they have a 3, but from what I recall, like a 5, 7 being the most popular, or a 10. So after 10 years or 7 years, that commercial loan is due. Even though it's amortized over 25 years, that loan is due. It's a balloon payment. At which point they're going to have to refinance it or renew it, whatever the correct term is. But there is a term, a much shorter term. Okay, so don't forget that when you are talking with those who are interested. The other thing is the interest rates. It's not like mortgage loans. So SBA specifically, I don't know about commercial loans, but I know about SBA. There's a fixed portion of it, the index, and then there's the margin. Okay, again, there's the index and the margin, and those two make up the interest rate. And it is a moving, unlike mortgage fixed rates, Okay, it does move. Now, it doesn't move a lot because the index part of it, it's the Wall Street Journal prime rate. Does anyone know what the Wall Street Journal prime rate is right now? No one? Have you guys ever heard of the Wall Street Journal prime rate? No? Okay. So if you Google it, it is 7.5% right now. So that's the index they're going to use, the Wall Street Journal prime. Okay, it's basically a survey of major banks, yeah, that's how much I know about the Wall Street Journal prime, because I forgot. But it's the Wall Street Journal prime, and then they're gonna have a margin to it, kind of like your HELOC rates, right? So HELOC also uses the Wall Street Journal prime. I don't know if you guys knew that. Okay, HELOC also use the Wall Street Journal prime. Okay, so it's prime plus the margin. Margin being, that's what the extra that the bank wants to make or the lender wants to make. So whether that's half a point, 1 point, or 2 points, that's something that's going to be set by really the lender. Okay, if you've worked with the HELOC, you'll probably see the same. Okay, that more or less in the world of HELOCs will basically alter your commission. Okay, the lower the lower the margin, the lower commission you make. The higher the margin, the more commission you'll make typically. Okay, I mean obviously there's other factors, but when it comes to the rate, that's how that works. Just like in a 30-year fixed rate, if you sell a high rate, you're probably going to get more rebate. If you sell a lower rate, you're going to get less rebate. Okay. So yeah, something that's very typical you'll see is prime plus 1.5. Okay. So for that commercial lender who's going to take an SBA loan, their starting rate is going to be 7.5 plus 1.5, which is 9. Okay. Obviously here, just to highlight, you see there's a different, purposes. You can refinance debt, you can consolidate. Tenant improvements is always a big one. And then obviously the most popular reason is the working capital, right? So you have a manufacturing company that needs a little bit extra money because they have to buy some equipment or their cash flow is just a little tight right now. Right, they can use that. I worked a lot with, liquor stores and markets. They needed more money to buy beer and wine or meat. They just needed a little extra money. And so they'll go with an express and quick $35,000 to help relieve them right away. Something like that. Okay. 504, again, so here's the slide, right? It's the bank portion of the loan, okay, which is 50%, which I didn't know. I think I personally have only done like one 504 in the 3 years. The rest comes from SBA. And again, SBA, minimum requirements 10%. Okay. Now, on that, you can say too out in the market, it's safe to say, because I've had 2 loan officers tell me this, but SBA actually allows 100% financing as well. Okay. Again, we will probably get on an SBA lender to kind of speak a little into more specifics, but just know that SBA does allow 100% financing, not just 10. Freddie, do you know why it's 10 is like what's kind of said out in the marketplace though?
Well, it's just the minimum gas injection. It's just the guideline, just like 3.5 is 3.5.
Okay.
For FHA, but it's just the minimum injection.
Okay.
Yeah.
But again, and you can confirm that 100% financing is allowed for SBA.
I would think so. I think it's creative financing. It's a combination of either seller carry or cross collateralization, where you are still gonna need to come in with 10% somehow. It doesn't have to be cash. It could be equity in another property.
Gotcha. Okay.
Yeah, I haven't done many like that, but I know seller carries a lot.
Gotcha. Okay. Thank you for that. Eligibility, the biggest one that I want to just kind of highlight here, and this is a thanks to Freddie, is this one right here, the last one, ownership. You have to be a U.S. citizen or a permanent resident, guys. Okay, so no DACA, no I-10, no foreign national, nothing like that. You have to be a U.S. citizen and a permanent resident. Okay, guys. Things like FICO scores, you know, it's very similar to real estate. Residential real estate. Typically 560. Obviously, the higher the FICO score, the better, right? Or else your rate's going to be higher. That margin might be higher. They may charge higher fees, right? Just like residential. Okay. Okay, so we're going to spend a little bit of time here. Why SBA? Obviously, for low down payment. Okay, the guarantee, it's easier to get opposed to commercial lending or a commercial loan where they're going to require 40% down, 50% down. I know a commercial lender that requires 60% down on buildings. That's over like $5 million. But so right, that's right there, lower down payments here. The rates competitive. I mean, I think this can go either way. Commercial lending typically does have lower rates or I would say commercial lending has better rates. Right now, where SBA might be around 8.5. There's a lot of commercial lenders right now that are giving out 7% rates right now. Okay, but I guess it's competitive from the standpoint of very low down payment and the alternative of using hard money or private money for commercial loans. Okay, because that's a big space too. Okay. One thing for you as a residential loan officer to always note is when you're working with a borrower, okay, and that borrower owns a property, okay, and let's just say there's a lot of equity in it, SBA will slap a lien on that residential property. Okay, guys? Did you guys all hear that? So if, let's just say Brenda is starting her own real estate company. She's going to start her mortgage company, okay? And let's say she owns a house right now and there's like 60% equity in it, okay? She wants SBA financing to help finance her mortgage company. She goes apply, she gets approved. SBA will slap a lien on her property because there's enough equity. I think as long as you have, is it 20% equity? They will slap 25. If you have 25% or more equity on your house, and let's say Brenda has 3 homes, they will slap a lien on all 3 of them. Okay. Now let's say that she says, okay, that's fine. I really need this $300,000 SBA loan because I want to really start off this mortgage company. Let's say 3 years down the road now, rates, there's a pandemic, 2 and 2.0, and the rates drop down to 2%. And she's like, oh my God, I have a 5% rate. I want to refinance all 3 properties. I am not saying that she cannot refinance her properties with those SBA liens on it. But what I am saying is it will be very difficult and it may be very, very time consuming at times. Yes, Reddy, go ahead. You're shaking your head.
Yeah, the SBA won't release those liens unless you get paid off.
Oh, okay. I said that you if you are, and where I was alluding to was because but that also depends on the lender, no? Because I know BBCN Bank and Bank of Hope and Hami Bank at the time were subordinating.
There would have, like I said, there would have to be, because if you're refinancing, cashing out, the lender has to get really comfortable with that subordination clause.
Yeah. Okay. Got it. Yeah. So again, it's very difficult. Okay, when you have an SBA loan. Okay.
Can I chime in on that? The reason being that the commercial lenders, for one, the SBA, they want to collateralize 100% of what they lend to you. You know, so that's why when you're looking for working capital, things like that, they're going to look for any type of asset to collateralize. There's no walking around money per se.
Yeah.
And so unless you really have a strong cash flow, they hardly ever do just walking around money. Oh, I need 250,000, but you don't have a defined purpose for the money.
Yeah.
So that's one. And then with respect to the equity, it's right. Like if you have property, obviously it helps to have equity. And if they obviously they see that you have that equity, they're going to want to secure as much as they can of the loan amount that they're putting out there for you. So the concept is, if you believe in your business and then you're confident about what you're going to do with that money, why should you have doubts about putting a lien on your house to get that money?
Gotcha. That makes sense.
Question.
Yeah.
So okay, so let's say you take out the SBA loan, the property does not have the 25% equity, but then a few years down the line it does. So will they put the lien on there?
No.
Okay.
No.
So at the time of application. Okay.
Right.
Yeah.
Right.
But also remember, not having it could mean getting approved or not, because at the end of the day, it's all about collateral.
Yeah. Do you guys all understand when Freddie means what in what context collateral is being spoken of here? You guys understand? Yes, no? And you went on.
Is it like the 10% collateral you're talking about?
Right. So right in the residential world, right? When let's just say it's 80-20. So it's $1 million property. The borrower does a 20% down payment. The first mortgage loan is going to be 80%, right? What is a collateral? The property itself, right? And for good reason that, should a person default on that $1 million house, when the investor or the bank seizes that property because of a foreclosure, the collateral is there because the property itself, houses will sell, maybe not for 800, but it might sell for 700, right? But that's enough to where they can recoup their money back, right? In the world of business, though, it's kind of like this. It's like SBA is gonna offer you, let's just call it 90% financing, right? But in the world of commercial, what's really the collateral? Because the business, once a person defaults in the business and walks away from a hotel, a liquor store, a barbershop, a restaurant, what is the collateral? It's not a house where you can resell it for close to that lien amount, that 80% or 90%. In a business, when a business is liquidating, it's pennies on the dollar, right? So let's take for an example, a restaurant. Let's just say Rogner buys a restaurant with SBA. I do 10% down. I get a $90,000 or $900,000 loan. Okay, $1 million restaurant. Let's say a year into it, I miserably failed it, and so I'm gonna walk away from it. I'm like, you know what, bank, take it. I don't care. There's nothing useful in there. So the bank is gonna put the chains, get the county. Sheriff comes, put the locks on. Bank's gonna take over that restaurant. But the bank still has this $900,000 loan. How are they going to recoup that? Is someone going to buy that business for $900,000? Absolutely not. They wouldn't even probably buy it for $200,000, right? And so the bank's going to be like, okay, let's liquidate whatever equipment is in there. They're going to get pennies on the dollar. How much can you get chairs, tables, a grill, a hood, a flat top for? Pennies on the dollar, right? And that's what Freddie's talking about. They need collateral. And so, yes, they're going to give you 90% of the purchase price, right? But they have to claim, they want as much collateral as possible. So if you own 5 houses and they each have $200,000 of equity, and that's 25% or more, great. They're going to slap a lien on all 5 of them because there's a collateral now. Does that make sense, guys? Okay. Kind of finishing off here. The application. So the application is very similar to that of ours in the residential world. They have their own application form, very similar to a 1003. The biggest one that they have that we don't use is the PFS, the personal financial statement. If you have never seen one, here, actually, I'll bring it up. it's basically, a huge, they just want you to list out all your assets. And like in our world, in residential, we don't care about it, right? How much assets you have. But they do. They want to know what all your assets are and what all your liabilities are. It's basically a balance sheet. Okay. It's a balance sheet if I've ever seen one. It's all your assets and all your liabilities. This can actually be even broken down to even further real estate schedule right here. If you see that, real estate. So if someone owns 10 properties, they're gonna have to list everything out, all the mortgages that are on there, the taxes, the insurance, et cetera, et cetera. So this is a very, very, staple document in the commercial world when you apply. This is actually SBA's form. So, but again, should you work with your commercial lender, they'll provide you all that. Fees, kind of like, when we work as a broker, so there's no really rebates. So I guess for us, it's different, but yeah, just know you're not going to sell a higher rate to get a rebate. Okay. It's not going to work like that. In fact, if anything, let me just say this. You don't really have much of a say. Okay. You respect and you leave that up to the commercial loan officer that's going to handle the deal, and you're going to get a cut of it. Okay. Again, we'll have a commercial expert come on to kind of go over compensation, because it can be lucrative though. It can be lucrative for you guys as another avenue of business stream. Okay. Just know that in the world of commercial though, just unlike residential where everything's in twos, right? 2 months bank statements, 2 pay stubs, 2 years tax returns. In the world of business or of commercial, everything is in threes. Okay. And business and bank statements is also 3 months. Am I not correct, Freddie?
Well, yeah, if you're going with the purchase loan, yeah.
Yeah. Okay.
You need 2 months, honestly. Like
Okay.
it should need to be there for 60 days.
Okay. Great, thank you. Yeah, so I'm gonna stop sharing here. Yeah, hope you guys learn and took away a few things regarding SBA lending. Again, the main components really is it really just kind of see it through the lens of FHA, and it'll make a little bit more sense. But yeah, and just know that you do have options here at Giving Tree to work with an SBA commercial loan officer who'll get the job done for you. I would say, and I would like to go as far as to say that our partners on the SBA side, they're really, real competent people, real competent professionals that really know what they're doing. Because you'll run into commercial loan officers that, yeah, it's pretty obvious they don't really what they know what they're doing. Okay, kind of like the unseasoned loan officer, that we don't want to be, right? Not as competent. Commercial is a little bit, granular in things. So, any questions? So we do have Freddie, who is, has a ton of experience in the commercial world. I'm very limited, so I'm going to stay off of it. I don't know if C wants to have any input, but do you guys have any questions right now regarding SBA financing?